These are their attempts to hold back, I think, the price of gold, which really is I guess you could say the pulling back of the curtain to expose what's really going on. There'll be great volatility. This will be something that will be met with every attempt to suppress the um, the fact that gold will tell the truth about what's going on in the market, the fact that the bond market will tell the truth about what's going on, and the Fed is losing the ability, I think, rapidly to hold it back. So you're going to see great volatility until
Andy Schectman delves into the precarious state of gold and bond markets, revealing a profound struggle between truth and manipulation. He exposes the Federal Reserve's diminishing control over these markets, emphasizing the inevitability of escalating volatility. Schectman points to the widening gap between rising yields and a diminishing global trust, painting a stark picture of a fragile financial landscape. He underscores the urgency for investors to diversify their portfolios with precious metals, positioning gold and silver as essential safeguards against the impending economic uncertainties. As Schectman unravels the complexities of these market dynamics, he unveils a looming financial storm characterized by challenges in the banking sector and commercial real estate. The discussion becomes a compelling call to action, urging us to pay attention to these crucial shifts and consider the role of precious metals in our investment strategies.
until it finally expresses itself, until the Fed just gives up on on trying to control the inflation through rising or suppressing rates, rather. I don't think they're going to be able to do it. I just think the market is going to blow through any attempts that the Fed tries to put into place to keep orderly, calm markets. And with that, you're going to have great volatility until it springs up to the upside. And I think we're getting close to that moment. I truly, truly think we are getting close to that moment where, look, the bottom line is yields have to rise to meet demand. And there'll always be demand if rates rise high enough. But, I think the question is, what are those yields that will attract buyers? And this is going to be a very, very bumpy ride for a while. Doesn't surprise me one bit at all. The news of the day starts to create all of this volatility in the gold markets. But look, bottom line is it's disappearing. It's being massively accumulated, and the Fed is backed into a corner, trying their damnedest to allow for orderly markets. It's not happening. I think it's only going to get more volatile, which is usually an indication of a market blow off one way or the other, up or down, prior to that volatility, or just after that volatility, rather. In Powell's last remarks the other day, he said geopolitical tensions pose important risks to the global economic activity. He also said that increased market volatility is to be expected, as is a significant economic slowdown as credit dries up. And so I think, you now have something to blame this on. This is an environment where I just think that the world is getting tired of the ever expanding deficits. By the US, 2023 marked the third highest deficit on record, other than 2020 and 2021, I believe, in the midst of COVID. We are continuing to spend like spending doesn't matter whatsoever. And at the same time, we are, I think, beginning to lose trust on the global stage. And that's a bad mix. I think people believe that this can go on forever, that the US bond market is too big to fail. But what I really think is happening is that there is a realization that the market is stronger than any Federal Reserve or any central bank intervention. Ultimately, the market will win this battle. And yeah, one other thing to talk about is that, we see the curve trying hard to uninvert. And normally that comes with, a situation where, the Fed is trying to lower short-term interest rates to stimulate the economy, but that's not happening this time. It's happening because the back end of the curve is rising, because who the hell wants to buy 10-year treasuries with all of the 10-year risk that you have there at the rate that they're offering. So you have to continue to see that the market will dictate that those rates have to rise higher and higher and higher in order to attract demand, which is only going to put greater and greater strain on already a fractured banking system, on the commercial real estate market, which you're seeing more and more problems. Huge apartment building in San Francisco is, it's been marked at roughly half of what it was just a couple of years ago. Here you're going to see more and more and more problems with the rising interest rate market. The Fed can't control it. They can try, but in the end, it is either they will have to step in to monetize and buy the back end of the bond market, which creates hyperinflation, or if it's true to the way the market should behave, rates have to rise to attract buyers commensurate with the amount of risk that's baked into the cake. And this is something that is not an easy fix for the Fed. I think it only becomes more and more difficult, creating more and more volatility. And more importantly, I think it shows exactly why you need to own gold and silver in your portfolio right now, as traditional assets are going to really come under fire in this rising interest rate environment. I mean, it makes absolutely no sense. And I think you'll see these rates continue to rise. And I mean, look, you have every reason to believe that in a real market, the 10-year treasury should be much, much higher than it is when we see, 3-month treasuries paying virtually the same rate. It doesn't make sense in an environment that has all this uncertainty. And that's Fed manipulation. At some point, the market has to take over, or the market just gets exposed for being a scam, just like most of the financial markets in the West are. And, that's why ultimately I think you'll see Abu Dhabi take over for the gold price setting mechanism, or the Shanghai Gold Exchange will take over for setting the price of metals. And I think that's really what a lot of this is about. It's the end games for a system that is opaque, that is based on debt, that lacks transparency and lacks trust. And this is what's going to happen: greater volatility, greater problems, and I don't think the Fed jumping in to try and hold down this sea change will do anything other but exacerbate the pain when it finally expresses itself.
In this deep exploration of the financial landscape, we dissected the struggle for truth in gold and bond markets, revealing the Federal Reserve's weakening control and the impending surge in market volatility. The widening disparity between rising yields and diminishing global trust paints a worrisome picture, signaling a delicate financial climate ahead. The key takeaway? Diversify wisely. Andy Schectman emphasized the paramount importance of including precious metals, particularly gold and silver, in your investment portfolio. These metals serve as stalwart guardians, ensuring stability amidst economic uncertainty. As you navigate the complexities of today's financial world, remember the crucial role of these assets. Stay informed, diversify wisely, and empower your financial journey. Thank you for joining us today. Don't forget to like, share, and subscribe for more expert analyses.